Hello, everybody, and welcome to another episode of the TradFi to DeFi podcast. My name is Tyler Sherwin, and I'm joined by my co-host, John Tejan. And John, I'm really excited today because we actually have our first guest on the TradFi to DeFi podcast.
Yes,
How about that?
breaking new ground on the podcast. So I'm looking forward to this episode.
Yeah, so our guest is Dustin Douglas, who is a partner at Octopi Capital. And I've known Dustin for about a year now, and he was one of our first members of the TradFi to DeFi community. And I can still remember our initial call with him. So, Dustin, welcome to the show. We are so glad to have you. How you feeling today?
Feeling great, man. It's always good to talk with you guys.
Yeah, so Dustin, you've joined all of our Friday calls pretty much consistently. I don't think there's hardly ever a Friday that goes by where Dustin is not in the call. And we love having you in there. You bring so many insights to the group. And so I think it's only fair for us to share some of that really cool stuff that you're working on with the rest of the group. And we'll just go ahead and get started. Just tell us a little bit about yourself, Dustin. How did you get started in crypto?
Yeah, it's a great story. So I've ran a few hedge funds, and when I was at one of the hedge funds and around 2016, I was always a guy who was mining Ethereum in my own apartment. And I remember some of the partners walked in one day and they were like, they looked at me and they said, what are you trying to do? You're trying to build a bomb? And I said, no, guys, I'm mining Ethereum. It's this new cryptocurrency. It's going to be great. And, they kind of rolled their eyes at me. Or like, all right, let's go out to dinner, grab our drinks, whatever it is. But it stuck with them. And so when our investors started to knock on the door, and asking us, inquiring about what's our crypto strategy? Are we thinking about it? What are we doing in the space? The partners naturally looked at me and said, hey, you know about this stuff. You're excited about this stuff. What should we do? So I spent some time putting together a cryptocurrency hedge fund that was to be our sister fund. Ultimately, we decided not to pursue that as a firm, but I was but at that point in time, before we're spending my weekends diving into crypto and then getting the ability to spend, a couple of months just diving into the infrastructure and the possibilities of crypto, I realized that this is something that I should really do. One of my mentors first taught me, he told me that you'd rather have a small seat on the rocket ship than a throne on the Titanic. And I really took that to heart. And so with that, I started thinking to myself, we see the programmatic trading already on the street. We were looking at how crypto can get, T+0 settlement dates and just really solve a lot of pain points there. I mean, we look at the back office of these large banks, it's $16+ billion a year, of overhead that can be compressed almost to zero. And so I started thinking to myself, where would the need really be and what would be a great entrance into crypto? So as I was already mining, I had a lot of contacts within the space. So we were able to get some of the, the famed S9, the Bitmain ant miners at a wholesale rate at the time where they were being sold for $6,000 a piece. We were getting them for, I think, $1,500 or something like that. And so there birthed a business. And so we were purchasing miners and running them. And I was helping to take care of that for all of my clients. I was very fortunate that some of my partners became one of my largest clients in the mining business. And from there, I met some guys who were interested in getting into the cryptocurrency data center business. They already owned a legacy data center and wanted to know who are these crazy guys running in and just buying up all the power. And so as I was helping them out and working on how for them to frame their marketing and their products and their value proposition, I was offered partnership. And from there, I vertically integrated my machines into the business. And from there, I ran treasury operations, et cetera, until it is that now we're in talks to be acquired. And I'm back thinking about what's going to be my next big thing. And from there, throughout this entire journey, I know we've all spoken for a few times. You guys have seen a lot about my trading background and et cetera. And I decided that as I do not have an engineering background, I I'm much more confident when it comes to finance and working in alternative investments. And so that's where it is. That's my next big thing.
Dustin, excuse me. One of the interesting things that I heard you talk about, and I think it'd be interesting for the people that listen to the podcast, is that the opportunity found you, but you were prepared for the opportunity when it found you. You know, you were already in the space. It wasn't a job. It was just the thing you were doing, and the opportunity found you. And I think that's a good point to make to people that are looking to get into the business is be prepared, and the opportunities will find you. Do you find that common?
I do. One phrase I say all the time is that luck is the residue of hard work, right? And so the harder you work, the more you keep yourself curious and developing your skills, and really just going after your passion. You know, and I think we all can talk about that. Farmer John, I know you liked farming, and now boom, now you're I would dub a farming expert. I know none of us are experts when it comes to crypto, insofar that it moves so fast, and we're always behind the curve. When we're always fighting to get to become superiorly competent, but it's follow that curiosity, work very hard, and you'll make it.
Yeah, so you had talked about that journey from your early stages of just mining because you had this interest. I'm curious, like, how long ago was that, and what was that initial thing that drew you to this idea of mining this imaginary money that's on the internet? Like, what was that initial spark, and how long ago was this? Is this like 2015, 2014?
I think this was around maybe 2015, 2016. It was, people were talking about mining Bitcoin. There's this new thing, and I was like, I'm not first, to be completely honest. Initially, when they told me, I thought it was the dumbest idea. And I was like, what is a Venmo situation or, PayPal? But then the more you start thinking about it, and the more you start realizing how analogous it is to things that we're already doing, and you break that psychological barrier, then it makes a lot more sense. And I'm sure we've all have experienced that phenomenon. And so I've always been a computer guy. My first position, I was at Best Buy selling computers. I was the network guy at my college, Georgetown, and I was like setting up networks, and I was apparently just Geek Squad, and I've always been Geek Squad to my family and friends, essentially, and so when I saw that, it was a way for me to really dust off some of those old skills. And I just saw it as the access of all these things that I loved, right? You have computers, you have people in economics, and you have the whole financial structure behind it and trading. And I thought to myself, this is something that's kind of fun. So I followed that passion, followed that interest there, and I just thought to myself, when I looked at mining, I thought you're always going to be long in the commodity. And so I realized that, look, if I can run a few of these, towers, and I can reduce, X amount of Bitcoin or Ethereum per day, overall, I'll always be, that investment would go farther than me just outright purchasing the crypto. And so that was my thought process for when I realized that, these machines, especially when you look at video cards, they can last 4 to 5 years, and you can always resell them. So the depreciation of them is much more muted than anything such as, a car, or, a shirt, almost anything. So I thought it was a really great opportunity to kind of get in there and low stakes, and I really haven't looked back since.
Yeah, I can tell that analytical mind has served you well throughout every element of your interest, because you're always looking at it from that analytical side. And you mentioned that it was a combination of so many of your interests, and I find that for myself as well. Like, that's what drew me to crypto. I was like, oh my goodness, there's people that like economics and monetary policy, but also memes and exciting potential to make a lot of money. I love all this stuff, right? I can't do anything else, right? So you had mentioned kind of like following your interest and it leading you down these different paths. And you mentioned that you're now kind of shifting maybe away from some of that more trading type of hedge fund type activity to more interesting stuff. So tell us, Dustin, like where's your interest and passion taking you today, and where you're interested in working, and where you headed?
Yeah, really great question. So I've always loved alternative investments. It's for trading. It's about accepting what's really happening, and so there's all of these. There's something called the mosaic theory when it comes to trading, where it is that you're able to, if you can put together disparate facts and some sort of tapestry and trade from it and make money, it's perfectly legal. Right? And I've always loved that idea. And so with that, the market always keeps you honest. Right? And so you trade what's actually happening. You don't trade in a bubble, right? And so I've always really enjoyed that. Then you look at venture capital, where you're creating markets, right? And so where you think to yourself, there's something that we should do, or something that we should have. There's these massive pain points that no one's addressing. And I would love to be able to build that, right? And so as a venture capitalist, you realize that you're able to fund these teams along the axis of things that you would like to see created, right? And so you can end up shaping and building industries. I've always been very attracted to that. And then one major thing has always been leverage. And so I think to myself, if you spend an hour of time and you get 1 hour of time ends up giving you back 10 hours or 100 hours, or you spend $1, you can end up making $200 or $2 million, right? I've always been attracted to that because I realized that it's either work smart or you work hard, right? And I've always, as a mantra from my school, unofficial mantra from my school, we like to do both. And so with that, once the business was being acquired, I thought to myself, what should I be doing? So I was speaking with some of my friends, and they're in venture capital as well, and they do a number of other things related to crypto. They said, hey, would you be interested in running some money for us? And I said, yeah, I think that's always been a long-term goal of mine. And from there, it's really just dovetailed into thinking about the structure of what really needs what do we really need as investors in the space. And so originally I thought to myself, my background is in liquid tokens. So creating a portfolio and thinking about, efficient frontiers and risk adjusted returns, et cetera, et cetera. And then from there, it really dovetailed into, when you think about it, when you really start looking at the different coins, you have these really early token investments, where, let's say, like a Filecoin a couple of years ago, or even back in 2016, Ethereum, where people invest in Ethereum, and Ethereum, as it hits the mainstream, then it unlocks liquidity. Right. And so as we're looking, and we realize this now, as I know some of the projects we've all invested in, a lot of it is almost, it's VC-like, where you're investing in the projects and the team because there's a deep need there. And then from that, where you're on the very precipice of VC-like investments, then it starts to shift, and it's a spectrum going from, even when you look at, let's say, Avalanche. Avalanche, you could say, is a deeply liquid, right? They're a deeply liquid L1, lots of liquidity, lots of developers, lots of users. They're just launching subnets, which is one of their key features, right? And so when you start thinking to yourself, between that spectrum, all these tokens are, as I said, on that same spectrum, but you start having you start having the necessitates a multi-stage fund, where it is that you can have, you're looking at projects we all see that we're all excited about, that we know are game changers, and people who we know are moving and shaking, because most of our research takes place on Twitter and Discords and not, any centralized news source. where is it when we see these new projects coming out, we see that they're clear winners, and so you would like to be able to skate where the puck is going for your investors, and so that necessitates a VC arm. And then as these projects, like I mentioned, Ethereum, become to mature, then you want to manage them as a portfolio, and so that necessitates some sort of portfolio. And then you have everything almost in between, where you have NFTs and these yield products and et cetera, where you can think to yourself, well, hey, we've just returned a couple $1 million of cash, or we're a couple million, we've liquidated some position. We have a couple $1 million here, and you go with stable coins where they're 40 to 80% returns, APY per year, which is still a very valid and stable strategy that you can provide for your investors. And so that's how it is that we really think about it at Octopi Capital, and that's what we're building, and that's the story in which we're telling our investors.
That's really interesting. That's an interesting strategy where you have a portion of it, focusing on early stage, getting in there with those ideas, those use cases that the industry needs. And then you kind of move over to the middle of the ones that have shown promise, that have taken some growth, they're being profitable. And then finally, that portfolio piece where you can kind of see the total landscape of what's going on and finding return where it presents itself. So that's a pretty holistic approach to it, as opposed to I just want to get in there with early seed money and see if it turns out, and 1 out of 10 is a jackpot, and that's all we need, which is traditional VC type of approach, just kind of spray the money around, hope something sticks and is a big winner. I'm glad it's a little more well thought out than that.
Absolutely. Oh, the real motivation behind this is, I think to myself, my parents, or anyone who just really wants exposure to crypto, and then it's such, as we all know, it's a night and day business, 24/7, can be extremely exhausting. And so if anyone needs exposure, you like to be able to give them it and give it to them in a real really thoughtful manner. And so, when you start looking at infrastructure, over the next 10 to 15 years, I think, VC investments in crypto that's where we're going to see a massive shift, right? We all know that crypto, as of right now, is around $2 trillion market cap, right? Where DeFi is somewhere between 200, 300 billion, right? With that, you have insurance, a $6 trillion marketplace. You have capital markets, $100 trillion. Right. And there's this really great quote where really the onus is that crypto is not a subset of finance. Finance is a subset of crypto. And so what that means is that, as we're seeing, all this stuff is going onto the blockchain. And, I'm not going to argue about which one as of right now. I think that will be a much longer podcast. But when we start looking at how while we're transferring risk and we're thinking about even processes. I think we all discussed for a long time how much easier it would have been if we had a crypto infrastructure already, where they were giving out that $1,400 or whatever to every person. If you had this crypto infrastructure, they could do it immediately. It wasn't no one was working overtime. It wasn't everything could be verified right there on chain. And so we're seeing a lot of really really great things with identity and credentials going online. Anonymous, on-chain messaging. There's just a lot of really great things that would simplify our lives, even when you think about mortgages, right? I was reading about this company who were, I guess, to issue a mortgage is something like 1,500 basis points at the very least, and they were able to reduce that by utilizing blockchain and like putting their something like things like their ID on the blockchain, on a private blockchain, of course. And then putting things like their credit report, things like that, where it is that you didn't have to have each vendor didn't have to verify that, this is their ID, this is their Experian credit report, blah, blah, blah. End up shaving around 800 basis points off the issuance of a mortgage. And that is extremely competitive. And so there's things that we see the blockchain is creeping into almost every facet of our life, because it's how we communicate and how we transfer risk, we transfer money, which ultimately is a very human endeavor.
Absolutely, and you can't really imagine doing anything else once you're in this industry, right? Like once you've gotten this taste of this, like it's just something you can't shake. And so I'd love to hear from you, Dustin. Like, what might be your advice for somebody who's listening to this who is super interested and compelled to hear a lot of what you're describing, and maybe they're newer in their journey? Like we call our podcast TradFi to DeFi because we're kind of helping people along this journey into the rabbit hole of crypto. What might be your advice for somebody that's interested in doing something like you someday?
Well, two things. One is first, you need a great network, and to do that, I'd highly recommend TradFi to DeFi. There is everyone,
and I didn't pay you to say that before you said it. John, did you pay him?
No.
You guys pay me in friendship and smiles and great alpha. That's what it is. You pay me in alpha. That's
pay me in alpha. That's good, and that's what we try to do. Yeah.
I mean, amazing. I mean, so first you have to be able to ask the dumb questions, right? And so then you also have to spend some time with you just going down the rabbit hole. And so it could be, every business can be a lonely business, and so that's why joining TradFi to DeFi or any other group of guys. You need your network of guys, and the speaker guys or girls, people rather. To really nerd out with, and people who can tell you, John, you've told me a lot of projects where you say, hey, there's did you miss? They're taking a snapshot. You should hurry up and put your coins in here, or get into this NFT project. It's a really great, budding, yielding NFT project, right? You can't be everywhere at once, and so you need something that can filter out the signal from the noise, right? And so. A lot of times I recommend, going on Twitter, reading as much as you can on Medium pages, et cetera, just finding your resources. And as I tell anyone who's trying to enter into any field, I think finding your daily resources that you can go to, such as TechMeme, and I think I really like the FinTech Blueprint as well. The Block has really great research. Bankless, of course, where we all met. How could I forget to bring those guys up? But where you begin to find your resources of high quality education material, it just ups your game so much faster. Where the things that you were thinking about, I need to research flash loans or liquid staking or et cetera, someone just was singing the same thing and provided a nice 10, 15-minute read walkthrough you can read, and you'll become slightly more dangerous in that one aspect. And so and I think the only thing I would say is to seek to give back, seek to push that information forward to people as much as you possibly can, the things that you learn, and that's just being of value. And so with that, you'll learn more, and teaching other people helps you learn as well. And so the whole thing just becomes this really virtuous circle.
That's interesting. I know information and news is really important. It's essential, and you pointed out a couple good ones. But there's also a downside, and there's things to avoid, or put your antennas up and go, okay, this isn't quite. Can you give just a minute or two of where not to go, or when you hear a certain thing, kind of like, okay, I'm not too sure about this resource? Because really, for somebody new in the space, they tend to, oh, wow, everything's true. Well, if it's on the internet, of course it's true, right? But in crypto, the same thing is true, that you have to be discerning and know when not to follow either advice or a tip somebody gives you. And, so is there one or two things you kind of red flags that you might get when you're like, okay, this isn't really where I should be?
Yeah. First, one thing that we always talk about is being mindful how much capital you have to risk. Right? That's one of the first things that I always talk about, where, if any sort of investment, any sort of trade, especially look at crypto, it's about risking something that you're comfortable with. So if you're thinking to yourself, if someone says, "Hey, you have $100 to do crypto," you have $100. Please don't go and use your credit card and take out other sources of things which will put you behind the proverbial people, right? Make sure, so know how much you can risk, know your risk tolerance, right? And then from there, it's about really assessing really their truthiness. And so that goes hand in hand with knowing how much you can risk. Like if you only have $100 or $1,000, you say to yourself, I want to risk. I think to myself, I want to invest in 10 projects. It's $100 each, and you have $100 per project. And so, as you think about it as practice, and you think about it as things where you don't have these requirements for returns. So, if we want a 1x return, or as we were saying, you go stable coins, get a 40% return, which in any other market is fantastic, right? But in crypto, everyone tries to do 10x, right? Everyone wants a 10x return. And so you think to yourself, okay, so with that, I only need to, with 10 investments, I make one 10x return. I'm still back, I'm back home, right? And so I think one thing that I've always found out as well, and this is true in the traditional market as well as crypto, is that no one has a magic 8-ball. And so when someone tells you that market's going up to, Bitcoin, 100,000, 500,000, Ethereum's going to be 30,000 by the end of the year, et cetera, right? Is to be mindful that if anyone can read the future, right? Most experts, we look at any political experts when they talk about any sort of, election, most of them are wrong. And so it's the same thing with every expert. They tend to be wrong. And so it's really thinking to yourself, being mindful when someone says, Thor is a great project. It can't possibly fail, right? There's always leave room for Murphy, right? Murphy's law. What can go wrong will go wrong. If you leave a seat for Murphy, it will save you a lot of trouble. So that goes back to my first thing I said is know how much you have to risk and risk that amount. And so if you want to make more money, figure out a way for you to shift that risk reward ratio. Or versus say, hey, I spend $1, I'll get $10 back if I'm right. Then you say, hey, I'll risk $1 and I want to get those projects where I can make $1,000. And so that's to make it worth it. All I have to do is make one of those projects per year, get that right, and then just build a process around it. And I think we all have our processes with information and risk management and when to take money and when to walk away from it, right? Which I know we've talked about for a few of our duds.
Yeah, that's really, really good insight because we're all trying to figure this out together, and that's why we created TradFi to DeFi to try and create a place where you can have your friends and colleagues and fellow degens, as we like to say, all exploring and figuring this stuff out. And I just wanted to kind of repeat a couple of the items you said, Dustin, because they were so great. So step 1 was join TradFi to DeFi. I think that's a great idea. Step 2 was learn from good sources, and we do try to aggregate as many of those good sources in TradFi to DeFi as we can. Number 3, you said, was give back and get involved and try to find ways of paying it forward. And then some things to avoid, you were saying, be mindful of your capital, how much you're risking, and be smart about that. And think about how you're entering the space with what you have, because the goal is never lose money, but that's often what ends up happening. You come into the space with money, and then sometimes it goes somewhere else, and you don't know where it is. And then you said, leave a seat for Murphy. And I think that's really, really good advice because there are so many black swan type events, especially in crypto, that people just don't really anticipate or think about. And I think you've given us a lot of really helpful stuff to think about, Dustin. But yeah, so I think we kind of covered most everything here. And I wanted to just make sure that people had a chance to reach out to you and learn more about what you were doing, Dustin. And so besides joining TradFi to DeFi, which we encourage everybody who's listening to do that, where can folks reach you and learn more about what you're doing?
Yeah, so we started up our Twitter, Occupy Capital. So I think that's a really great place where you start seeing, we're going to be posting a lot more articles and research pieces there. And I think one thing that I'm really mulling over is adding top 5 pieces of news articles per week. things that I'm reading, things that I found just very topical within the crypto markets in general, and just a way to really start the conversation with things that we're all looking at, we all find exciting. For instance, the wormhole exploit. You may find a very great article on that, and so versus having everyone else go and try to find the best article about it. There's things that if we're passing around, especially even TradFi to DeFi, you read articles like that, we'll be able to pass that along as well. And so I think at Octopi Capital would be the best way.
Excellent. Well, John, any other questions for Dustin before we close out here?
No questions. Just thank you for being our first guest and being awesome. And it was easy because we know you. And good luck in the future. And I think you're going to be inspiring some people as they watch this podcast, because it's daunting, but it's doable. Hard work pays off, and you're an example of that.
We want everyone to get to know Dustin as well as John and I know Dustin, and we can't be selfish and just keep you all to ourselves. So reach out to Dustin if you guys are interested in learning more about what he's doing. He's always in Discord as well, along with John and I. Again, this is the TradFi to DeFi podcast. Thank you so much for listening. Risks and disclaimers, of course. None of this is financial advice, and for mostly informational purposes. Don't go throw it all away on some meme coin just because you may have heard it here. And as always, we're here to help you on your journey from TradFi to DeFi, so please don't hesitate to reach out. Thanks for listening, everybody, and we'll see you on the next one.